Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that we have a market which has just created a massive breakout from a strong historical structure level for this market. This zone, in fact, was already acting as previous resistance, preceding all these rejections to the downside, and then the market broke above that zone with this impulse. Now, after this impulse to the upside and break above this resistance, all this previous resistance became support here. Because what we know is that in the market, when there is a strong level of resistance and the market is respecting it, when the market then finally breaks above the zone, at that point, that previous resistance becomes support. And the next logical step would be for the market to go and test that previous resistance turn support and then to reject it to the upside, which is in fact exactly what happened here. And from then, the market has been in a very strong uptrend, creating a series of impulses and corrections and anyway, new higher highs and higher lows. So clearly the market here has been in an uptrend during all this period because the creation of higher highs and higher lows are the definition of an uptrend itself. So here on the monthly, everything is quite bullish. Let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, the pattern is very clear. First, we got the strong move to the upside. Then we had this triangle formation in the form of a consolidation. And currently, we are in the breakout phase of this triangle formation. This is a very popular pattern. You see the impulse, then the market consolidates with a triangle, and then there is the breakout to the upside. For sure, you have seen this pattern many times. So at the moment, we are still in the breakout phase away from this level, which is currently basically the triangle formation itself. And as the market is rejecting to the upside, more bullish price action could be expected away from this level. Now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, I spoke about gold quite a few times in the past few days. I spoke about it when the market was creating this M pattern. From here, I explained all the reasons for which we could expect this impulse to the upside. Then again, I made a full breakdown explaining all the reasons for which we could expect the correction here and the continuation to the upside. Again, after this impulse correction, I explained all the reasons for which I was expecting this push to the upside. Then again, from here, I explained all the reasons for which I was expecting a retest of this level and continuation. And again, that is exactly what the market did. Then I made another breakdown explaining all the reasons from which, from this consolidation here, I was expecting an impulse to the upside. And in the very last analysis, I explained all the reasons for which I expected the market with this candle to go and retest this previous resistance turn support and reject it to the upside, which again is exactly what the market did. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. But at the moment, what do we have? Well, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. So essentially the non-commercials, so institutions that are in the money, in the market for the money, so not really for other commercial reasons. And these are essentially the big players in the market. Let's see how they're moving their orders. Well, with the very last few reports, we can easily notice how institutions have been moving back to the bullish side for gold. We went, in fact, from having 234.3k net positions all the way up to having now around 300,000 net positions. So this clearly shows how institutions have been decreasing their shorts, going from 87K all the way down to 38K, and increasing their longs from 289K to 338K. So currently, institutions are sitting with 338,000 longs compared to only 38,000 shorts. Clearly, they are positioned very aggressively to the bullish side for gold. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, we just got a very strong impulse to the upside, and now we're getting the start of a correction. Now, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can notice how we have the 0.3 to 50% and 0.618 retracements lining up at this area. Now, if the market after this impulse will correct to this zone, in my opinion, there is a good probability that we will see even more institutional longing inside of this zone, because we already are getting institutional longing. And if that will be the case, at that point, we would have even more probabilities for a potential rejection to the upside away from this area, fueled by the institutional longing. So if we do get this this correction after this impulse, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the Quant Analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools. Here, you will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show, so essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.